Hey, everybody. Welcome to This Week in Pre-IPO Stocks podcast. With me, I have Nick Busco, CEO of PM Insights. It's a pre-IPO secondary market pricing company, and Evan Cohen, founder and chief operating officer of WinthVincent.com. It's a media company focused on alternative investments. And I'm Aaron Dillon, and we do venture capital at AG Dillon & Co. All right. So, gentlemen, 3 topics today. First one, we got some exits happening. Okay? Some exits. That's
IPN
liquidity.
Window. IPO
Come
window
on.
open.
Come on.
Oof.
So we got an M&A deal with Wiz. Google bought Wiz for $32 billion. Huge, right? CoreWeave, obviously, we've talked about that. But they kind of tightened it up now. It looks like they're going to go at $30 billion. That's down from 35. And then Klarna is going to go, which we talked about last week, at $15 billion. And that's probably coming here in the next week or two. So I guess we could talk about the individual companies, but I guess my first thing, maybe Evan, we could start with you. Do you think, it looks like this is opening up. Okay, M&A, IPOs. Do you think we're going to see more of this stuff coming? I even saw a new SPAC hit the market that was raising money, right? So not a D-SPAC, but a new SPAC. So the SPACs are still around too. Do you think we're going to see some IPOs? Do you think we're going to see some M&A now that we got kind of a new regulatory framework? Where's your head at?
I think it seems very reasonable that we're likely to see some more IPOs than we have in the past. Look, the new regime is in, and deregulation is the topic of choice. Everyone seems to be excited about, and I think the opportunities for exits are going to flow. I do think that it's a little bit different than we've had in the past because of this other paradigm that we've discussed in the pod, the tender offer side of it, which I think we're going to start to see sort of a divide between the companies that can and the companies that can't. If you can tender offer, you probably will. And if you can't, or you have, terms that you need to go public and your investors are pushing for it, the IPO window should start to open. This is all assuming the macro remains somewhat optimistic, which there's a lot of headwinds with the tariffs. And
I'm even surprised you said the word remains. Yeah.
Well, the last 6 months, I would say, have been pretty relatively bullish and exciting. But you're right. There's a lot of macro wins in all directions that could influence that a lot. But I do think that the market's been dead for 4 years, 4 years. So it's about time.
Yeah, dead. It's dead. So Nick, do you agree? Do you think it's time now, and we're going to see some companies coming over the line?
Sure. I'm going to say more dead, than how Evan's pushing it. But if somebody's going to wedge the window open, you probably want to rush through it at similar timing if they start to have some momentum. So if CoreWeave comes out, Wiz Wiz is done that's a good sign. And Wiz is interesting because it was an acquisition, and if you annualize where they went, it's almost like the acquirer just went, oh, okay, 23 didn't work. Try 32. Switch the numbers around. It's a double. Annualized, it's a double.
Yeah.
So that is a good sign, at least for M&A. And if we can see something similar, I know CoreWeave is coming down from 35 to 30. PM Insights prices at 29.50. 29.5 billion. That could have a nice pop day one, and let's see if it could be sustained for the year.
I love that. I love how PM Insights prices at 29.5 and it's going to go at 30. That's a really good indication that the private secondary market's very much in tune with where the public market is.
It's converged now, right? It's as the probability has approached, I think we're within that 1.5-2%.
That's good. That's natural. That's very
pricing.
structured. That's very structured, right, Nick? Things just kind of naturally kind of flow into the public markets. That's a good thing, I would think, right?
You have that with the acquisitions that have occurred in the public to public market as well, right?
Right.
So I think it's makes sense.
I want to counter with that just to make the point that I do feel like the IPOs that have come out in the past, which, we had some last year and we have some this year, they're being priced relatively conservatively so that they can have the narrative of a pop. So they can have the narrative that hey, it's not going public is not the end all be all. You're not going to go bust. And so I think that also, there's a narrative there that the people running these programs are aware of, and they're trying to create the narrative so more companies can go public too. So I think when you see CoreWeave was supposed to go at 35, now it's at 30. I think that's pretty clear. They're trying to be conservative so they can get that, that double-digit % bump. I think you'll see the same thing happen if Klarna goes out. They were valued at like 40 billion at one point, right? Or 35 billion. Now they're at 15. So you'll definitely, hopefully, if they price it low enough, you'll get a nice bump on day one. You'll see the stories troll out, warms it up for other people. Sort of what I like what Nick said is like, if some other company pries the door open, you should get in while the door's open. I like that.
I mean, what I think it's what's interesting about this crop of companies coming is they're actually really interesting businesses, right? Like Wiz was growing really fast. CoreWeave's growing really fast. Klarna, like to your point, Evan, they got smacked about a bit, right? But I love that the CEO at that company, I love what they're doing with AI and their operations to make things more efficient and kind of drive profit margin. And then, they're growing really fast too on the top line revenue side. So it's like, these aren't like, like StubHub was going public. I had somebody call me about StubHub, and that was like public, and then a private equity company, I think, took it private. Now it's coming back public again. It's like, yeah, okay, sure, IPO. But like these three companies, I think are really interesting businesses, right? That in the long run or medium term to long term, I think could be really special companies, right? So this is what's, I think, exciting to me is that they're not only are they IPOs, but they're actually interesting companies, right?
And I think they're all profitable, is my understanding.
Yeah, Klarna just turned the corner. Wiz, I think, has been profitable for a while. CoreWeave, I think if you took out their
the CapEx are probably not.
Right, yeah. If you took out like their interest service, right, they'd probably be profitable. It's like that business is like debt heavy.
Yes.
You know what I mean? So that's one you got to probably kind of keep your eye on. But are there, just before we move on to the next topic, are there any other companies, if you guys got the crystal ball out, right? Do you think there's anybody else that would be coming soon? Like Discord's been rumored to go like early next year. But are you guys hearing any rumors or any buzz around 2025 IPOs? I'm not hearing anything. Well, what about you guys?
Discord, I definitely heard about. I know there's at least one company in my portfolio that did a tender offer. I know that the bigger players are doing tender offers. So I don't have anyone in my docket right now that I think is likely to go that I know about.
Yeah. If in fact, I'm hearing almost like the opposite. Companies are saying, to your point, Evan, around the tenders, like they're saying they're going to stay private for longer. And some people like Stripe are coming out and be like, I don't think we may never go public.
Yeah.
I mean, that's very different.
I saw their recent comments and I kind of like that. They went through, oh, maybe it's it's something to do to, no. This is not right for us.
It's amazing.
It's a bold
come
statement.
on. If you were to say that like 5 years ago, everyone would have like been shocked, right? But I think I got to tell you, I think the secondary market's been much more institutionalized. It's a lot more structured. I think with the tenders, like you were saying, Evan, like people are seeing these tenders happening now and they're very like thoughtful and like well done. And they're not hard to pull together. They're like often oversubscribed. So like, those are all like very positive things. I think if you're a CEO and you want to stay private, liquidity is not a reason anymore that's forcing you to go public. Like you have to have other reasons, right?
And they want to be, I think CEOs are now being a lot more thoughtful in and around the golden handcuff dynamic, right? So even with Wiz, I mean, we saw the idea that they have retention bonuses, right?
Yeah.
I think that's really smart, but you can't play that so many times over. But how Google would work with the RSU structure. Right. They're going to get, right, as soon as those golden handcuffs start to go away, they're going to get a whole nice bunch of RSUs from Google. So it's a transition type thing. Okay, go from Wiz to go to us. And then that's a nice way to play it. It's a very good incentive, and you just have to play those right to keep the top talent.
Yeah, I mean, I'm super happy for the folks that work at these three companies. They're going to make a lot of money, right? Which is like, I think pretty amazing. So
yeah.
All right,
Aaron, I'm going to ask you this question again, just on this stuff. So you're running these deals. When you run these deals, I know you've done a couple of deals already this year. What's your expected duration of holding those? What do you tell investors?
Yeah, like 3 years ago, I was telling people like 3 to 5 years, right? Mm-hmm. And now I'm telling them probably think more like 5 to 7. Okay. With some companies that I'm offering, I'm telling them I don't think they're ever going to go public, right? So I'm just being straight up, and I'm like, so we're probably looking at we're probably looking at. So I have a 5-year liquidity window on my funds, right, Evan? So it's like when I talk about the liquidity on my funds, it's like the sooner of three things. It's like M&A, an IPO, or the 5-year anniversary of the fund.
And you'd
Right.
round
So,
trip it at that point, right? Right, Aaron?
or I'll sell LP interest in my fund. So like if one investor wants to get out, we'll have somebody else come in and buy them out. You know what I mean? So it's at that point, it's like a double layer SPV, right? Kind of thing, right? In the market, in the secondary market. So that's what that would be at the 5-year mark. So we have liquidity windows at the 5-year mark and the 10-year mark. And then, but my intention as the portfolio manager is to be like passive. So I'm in until this thing goes public, right?
Long.
The only thing that would like change that. So like a Stripe, like, if I owned a Stripe and the Colson brothers are saying that they're going to stay private forever, and I'm maybe 12 years into the fund and there's only like 2 people left in the fund, right? I'd probably go to them and say, hey guys, I'm going to probably throw this into like a continuation vehicle, or just like, why don't you just take an LLC? Just take it, take the LP. We'll wind off all the audit and everything else, all the fund expenses kind of go away. The fund administrator, and you guys just kind of like run it, just the 2 of you going forward. So, there's solutions to that, I suppose. Right.
Makes sense. That's what I would expect. I think you're right on track there. 5 years seems like a good.
I don't want to sell. But all of my clients are, individual people. So like life happens, you know what I mean? They want to buy a vacation house. They got to pay for their kids' college. They die, people die. And then the kids want to get liquid. So, I mean, there's all different things I know that sounds morbid, but that's the reality of it. Yeah. So that, that's the stuff that happens. So, okay, let's talk X. So X did a raise, fellas. X, Twitter, $44 billion valuation. Okay. They raised $1 billion. So this was the price that Musk bought the company at. So they're kind of like back to square, which I think is a huge deal for liquidity, because I'm sure some of the original people that did this deal would love to kind of like or some of those LPs would like to get out and move on to something else. This, I think, actually allows people to do it now that it's back to kind of, I'll call it par, right, to where the acquisition initially happened. But what are your guys, like Nick, what do you think about this deal, like the round, right, per se? And then also, what do you think of this company? Like, if you're going to buy it today at 44, does this thing double, triple? Like, what are the prospects for X, right?
Yeah, I'm not the most massive proponent of X, in part because I'm feeling like, Elon may be a bad, like, I don't know, he's so polarizing right now. And I think the reason why they had to do $1 billion, because then all of a sudden that valuation back at 44 is credible. If it was 250 million or anything around those, no one's really going to trust it, and it was just artificially putting the price back to something substantive, or pegging it back to where it used to be.
Yep.
So I think if I were to buy into Elon holistically, I would like to do something that is not just another media company. That's why I think SpaceX is amazing, and I would say that's more of a buy than something like a Twitter that actually doesn't have as big of a moat. Someone else could come in. It could be too directly tied to him as a person as well. Look at the Tesla share price, and I think some of that could have dripped in. But yeah, so yeah, I wouldn't say this is a buy for my thoughts at the 44 billion again, especially for how far it slid. How far Fidelity was marking it down. I forget what the low point was, but it was pretty beaten up. The market didn't think that he got a good price on that.
That's going to be interesting to see how Fidelity marks us after this round closes, right? This $1 billion round closes. Because if they're marking it at 44, then it's going to be, if they're marking it less than 44, then that kind of tells you
it'll be interesting. Right. I forget how many were involved, but yeah, you could see some mutual fund data on that.
Hey, Nick, what are we seeing on it though? Like, where is it in the market, in the secondary?
Not a whole lot, to be fair. It's never a name that has a ton of liquidity.
No. I mean, I have people call me all the time looking to buy X, and there's like no liquidity. I mean, obviously when they were doing the round, there was a whole bunch of liquidity, right? But And I do expect now that this has happened that there'll be liquidity after the fact too, especially if they start to get on the path with like the valuation starting to move up like every 6 months, every year. I think you'll start to see a lot more liquidity in the name. But I mean, Evan, what do you think? Like they got, X owns 25% of XAI.
And just to mark on that, I just pulled it up while we were chatting. The liquidity we see, there was some buy interest, but it was less than half of where the mutual funds would mark the stock.
Got it.
What is that at? Was that like a 20?
The
mutual funds I thought were doing it at 20.
That would make it 10. I don't have the share count, so I couldn't convert it to valuation very quickly.
So look, this is it's an interesting case study on structure, right? Mm-hmm. Because we know that there's a bunch of debt in here. We know that debt is tied to Tesla shares. Tesla shares have been very severely impacted in the last several weeks.
Right.
I actually wondered when I saw this round, I was like, why? Why are they raising money? Like they don't need to. They've got Elon, et cetera, et cetera. But then I probably was looking, maybe there's a potential call on the debt where he was maybe going to get margin called there because he had the debt there and he needed the money back. So they raised the money to protect the company. Right. But so I think we don't know the structure of X and how they structured it with the debt and equity piece. But what you said, Aaron, which is why I think it is an investable option, is because they own 25% of X. And if you just do a little bit of like narrative thinking through here, so OpenAI is worth around what? They were 150 to 200, 300 million, 300 billion. And so if you have any belief that XAI could get to that valuation, then you're looking at 25% stake. That stake alone could be worth 44 billion, 50 billion. And so now you're like, wait a second, I'm going to buy this media company that has 350 million daily active users, monthly active users or whatever, an advertising platform, and I get a stake in an AI company, which seems to be growing.
Right.
It seems like a pretty attractive asset. Plus you have the entrepreneur of the century running it. So there's a lot to like. But as I said, but like the thing that always gives me pause is I just don't know the structure of the deal. And Elon is polarizing, and I can understand why people don't necessarily want to have dollars associated with him in a software play compared to a hardware play. But I'm surprised that there's such little liquidity. But that's just me.
We have way more liquidity in XAI than Twitter.
It makes me wonder their structure. That's what I'm thinking is their structure.
XAI, the right people. There's plenty of XAI out there to grab. I mean, but I mean, look, I agree 100%, right, Evan? Just that XAI valuation, I think is going to go up fast because of all the capital. The guy wants a million GPUs, Musk, right? In the XAI data center. So my thesis on the valuation of XAI is that they're going to get to 150 billion, 200, 300 billion dollars fast, right? Because they don't want to dilute themselves, and they're going to be pulling in all these GPUs, right? So they need capital by the GPUs to get that million GPU data center. And like Musk wants to go there fast. I mean, that's why they're building the data center themselves versus, third party. So I mean, that 25% of XAI, to your point, that could be worth $75 billion
Correct.
all by itself, right? You know what I mean? So, but I guess to me, like, and that's like a tip of the cap to the value of the data, right? That X has, which is, important. I guess the thought to me is like, some of the other revenue streams, it still doesn't seem like they're firing all cylinders on advertising over there. They've talked a lot of talk about financial services, right? I mean, now that we got an SEC that seems to be very crypto friendly, and also the banking regulators have done a lot of stuff with crypto too. So like, I could see something happening with X and crypto and banking, right? International payments, like that kind of stuff. So like, and stablecoin. Like, I don't think they're going to do anything cute, right? It would just be kind of like fastball down the middle, blocking and tackling stuff. But it'd be like digital wallet, international payments, like easy stuff. So I mean, and Musk is an old payments guy, right? So there could be some revenue there. So like, that's kind of what I'm interested in, is if he kind of wants to move down the path of being the everything app, you got Twitter, now they got video in there. They have financial services coming. They have like AI large language model with Grok, right? I mean, so they got some multiple things coming down the pipe. If they keep going with that that could be interesting. I don't know if you're ever going to see an X with like 1 billion users, which
I don't
is
know.
what I think.
I feel like we're in a media renaissance. Like
Mm.
we're at a tipping point where traditional media, and new media are just sort of converging and having their day. I mean, many people talk that or have said that podcasts were the thing that swayed the election. We have prediction markets that are changing the way that people view markets, and I feel like we're entering a different paradigm of the way people consume media. And there's only a handful of outlets where people consume it today. There's
Okay, that's an interesting
Facebook.
point.
So like there's Facebook and there's Instagram, which are owned by Facebook, obviously, or Meta, and then there's X, and then there's TikTok, which TikTok has its own, issues going on like geopolitically,
Right.
and then there's Snap, and then there's all the Gen Z and new versions of it. So there's not that many players out there. So I feel like they do have an opportunity, and if you want to invest in a contrarian bet against Meta, this is a pretty solid one.
But you're not wrong though, because the only two places you can really post long form content is YouTube and X, and then I suppose, you could like obviously podcasts, but that's just audio, right? So I guess Apple Podcasts, Spotify Podcasts, but like that, and I guess you can do long form video on Spotify now too. Although I haven't delved into those waters quite yet.
Ooh.
But that's interesting. It's interesting you say that. I hadn't thought about that before, because if this trend does continue, that kind of stands to make a solid argument that a lot of advertising dollars could come X's way, right?
Yes.
If that holds true. That's a fair point. That's a very good point.
Just the attention, advertising dollars, programming. I think the NFL was broadcasting something on Amazon, which was being simulcast to X. Like you're just seeing there's a lot of innovation happening in the way that people consume media, and different channels are growing quickly, and we're just entering a different era, the hardware and software side. So it's good to have bets on or chips in a lot of different squares as we enter this new shift.
Yeah, well, I haven't. You know what I haven't done yet? Because I know there was an X TV app, right? Like I'm a streaming guy, right? I don't have regular cable, but we use Roku at the Dillon household. So they haven't, as far as I know, they haven't done an X Roku app yet, right?
No.
So I gotta see if we can get my hands on one of those sooner than later. But that would be that would probably put me over the top on like watching long form video content on TV, right? Because that's where I kind of watch a lot of podcasts and whatnot and things that I follow.
Yeah, so I'm trying to pick up the pieces here at the end, comparing X to YouTube, right? Because YouTube has the majority of all viewership for any of these medium to long form creators, right?
That's right.
How does YouTube get paid similarly or dissimilarly to X though? Because X is going to have to serve up someone else's content or a Coca-Cola ad in the middle of your long form video. I just feel like the feel is very different on X, right?
Oh, it definitely is.
Are you having your videos interrupted ever? Because also YouTube has a good combination of TV viewership and mobile viewership, whereas X is majority mobile, right?
I agree with that.
So
but I think this is where I think to like the discussion, they got to do this like TV app. Like if you look at the YouTube stats, and I haven't looked at this in a while, so I apologize.
It's still strong on mobile as well, yeah.
It's very strong on mobile, but you'd be surprised how much is the TV app. Like people watch YouTube on TV. Like the kids watch it on TV and stuff like that, right? So and I watch it on TV, right? You know what I mean? Like,
so if the Dillon family's on Roku, the Fusco family's on YouTube.
Well, listen, I got to tell you something. You know what I do? I listen to like these long form podcasts for like an hour, 2 hours. I actually prefer not to listen to the audio on Spotify or Apple Podcasts if I listen to it on YouTube. Because then if I stop listening to it and then I can go to my TV and watch it after the kids go to bed and it picks up where I left off.
Right. So there's the premium component, right? Because once you pay for premium, you can't listen on your phone with the screen off without paying for premium.
Oh, Nick,
and then there are no advertisements, right?
Yeah, you're smart. You're very smart. YouTube cold. Yeah, like listen, I think there's something to this. Yeah, I think there's something to this. I think you're right. But this to me, like Evan, to your point around the trends, and then Nick, to your point around kind of where they are, I'll call it in their product life cycle, right? it sounds like there's opportunities in both areas that present itself, which I suppose I hadn't really been thinking about those things.
Don't you think? Yeah, and the very curious thing here is I don't think YouTube is trying to exert influence on anybody. They are just making money, right?
Yeah.
Whereas X, for better or for worse, or whether it's true or not, I feel it's trying to exert its own influence. Just like
there's a lot of that. There's a lot of. But I would say too, there was like when the pandemic was happening, they were taking off a lot of stuff. I mean, that's why, like, my understanding was that's why a lot of people started to post on X their long form stuff, because YouTube was taking it down. Because it was like they would talk about COVID or something in the podcast, and then like YouTube would take it down for misinformation, so they posted on X, right? So it's a little bit different flavor of the same thing, but it is amazing to me that there's only 2 places in the world to do this, right? Evan, to your point earlier, like if you think about long form streaming video content, like user generated, right? There's only 2 places in the world where you can go and really post that. I mean, I guess you could do Rumble and some of these other like ones, but I don't know anybody who goes to those things, right?
Or Spotify. Spotify has the ability to like stream. They're doing the video stuff now too, but I just think
a good one.
I feel like there's just a divide, in my opinion, that YouTube is much more about produced content, and I've been thinking about this for a long time. I actually wrote like a long essay back in 2012 where I thought this was all going, and it kind of is like now exactly where I expected, is that like all this production is digital. But I do feel like YouTube is much more for produced content, and Twitter is much more in the moment content, or X is that. So it's like about news. When you want to see, hey, like I heard that Iran is firing missiles at Israel, and you want to get the latest update and the video footage of what's happening there, you're not going to YouTube. You might, but like I don't think that you're going to get the same discover experience as you would on X, where people are posting it live. And so they're just different. And I think like it's going to be a competition between the two to see. They're both going to encroach on each other, I imagine.
Yeah.
So where does like the BBC or Wall Street Journal or New York Times fall into that equation then, right? Because Twitter, though not validated, you will guaranteed get your news there first. If something happens, think about the assassination attempt. Immediately, 1 second later, it's on Twitter.
Yeah,
and then all the other news outlets are going to confirm, make sure it was legitimate, and then it's on there. But people are very willing to take their data and their news and many other things from smaller sources or smaller voices or what have you on these platforms.
I just don't know. To me, it's like, can I invest this thing? Like I have people calling me up and be like, let's invest. And I'm in
back
my
to
mind,
the investment thesis. Now we're just chatting like.
Yeah, I mean, like it's like okay, but it's like so. Can X go to 100 billion? If it's at 44, right? Can it go to 100 billion? Can it go to 150? And I think probably the biggest argument is that it owns 25% of XAI.
And that's already at almost $1 billion or 100 billion.
Then one might argue just buy XAI. Okay. So then if the company has to stand on its own 2 legs, I think a lot of the stuff we're talking about is interesting. I suppose I'm maybe more interested in, because it's already at 44 billion. I'm more interested in incremental revenue stream. Right. Okay.
Yeah. Good question.
But like incremental revenue streams, right? You know what I mean? Like that, like the financial services or whatever else they got cooking over there. You know what I mean? Like to Evan's point, if they get so much long form content, they could start to do like exclusive deals, and then they got like a YouTube TV kind of thing, and they're charging people $50, $75 a month. Like that's an interesting business, right? So like, I don't know. I mean, I just, that's where I wish I had more transparency in what those other revenue opportunities could be down the pipe, right?
I'm sorry to kind of putter in. The revenue is flat though.
Yeah, I know.
Since he took them private. So who's to say you're going to take something and just like slap a turbocharger on it and it's really going to change the full dynamics of it? But that's why you look at XAI and the thing is freaking launching because it's on a growth multiple.
XAI.
Wait a second though. It's flat, but it's totally different.
What do you, Mex, you're saying?
So when he
where the revenue comes from, right?
When he acquired X, there was no subscription model. There was a totally different business model underpinning this, totally different relationships. And
Fair point. Fair point.
the revenue is flat, but he's done it effectively from square one because he didn't have any of this incremental this subscription revenue. I feel like that's the thing you're looking at is the momentum from zero, not the momentum from flat.
That's a fair point. That's a fair point. That's a really fair point.
So in a way, I know Aaron wants to go to the next topic, but this is great. So it's kind of as though your new revenue, let's say, is a more SaaS subscription model type style, deserves a better revenue multiple than the advertising agency model, which is completely fair. I get that, and it's
an option. You get both. You get both because the advertising is not gone. The advertising, it's not
Disney,
great.
And Nike or whoever, just like no, we're out of here.
But you'll see Tucker and Fox News and all these other people do it. So it's not zero, but you get this huge subscription revenue, and you're seeing that he's embedding Grok's business model into X as a distribution way. So there's a lot. So there's a revenue share there. So if you're going and you're thinking about that business growing, plus all the other options, the media, the advertising, I think he's launching shows, like exclusive content. Like there's just a lot of options there.
And he has cut cost.
Yeah, and he's cut costs substantially. We hope. So
optically, there'd be no way.
So if you're looking at if you're looking at the year over year, growth rate comparative acquisition to today, I don't think it's a fair comparison. I think you have to look at it based more like 0 to 1,
like where they are today or where they were, like rock bottom, I suppose, maybe like a year ago or 2 years ago, kind of thing. At fair point. Yeah, fair point. Okay, I don't know. This one I'm keeping my eye on. As you can imagine, I have some clients. I don't think my clients are any different than anybody else's clients. So half of them are Democrats, half of them are Republicans. It's all the folks who are Republican right leaning that are really interested in buying X. I think they view it as like a support for Elon Musk, right? Which is in vogue these days. So that's who's asking. But I'm, look, I'm very I don't know. To me, I'm very sensitive. I want to do the right thing for my clients. So if you buy this thing, like buying in the secondary markets isn't cheap, right? So if you do this, you got to get a 2x return, a 3x return, right? I think within 5 years time. So if I can't see a path to get to $150 billion business, it's kind of
back to buy XAI.
Yeah. What I mean? There's probably other things like a cost of capital, opportunity cost type thing. So I don't know. I mean, it's, I would say there's probably other ways to support Elon Musk in the private markets if you wanted to do that, if that was the primary motivator.
We never talk about it. The Boring Company. Best name ever.
The Boring Company.
Right?
Or Neuralink. Dude, Neuralink's out trading now too, right? I mean, there's some stuff happening in Neuralink, which wasn't happening a year and a half ago. So, but that's another company with who knows? They're not monetizing either yet. So it'd be interesting.
Aaron, if you do end up doing a deal, and we can move on to the next topic. If you do a deal with X for X, we would love to know what the terms are. Like what's going on, if there's ratchets and other weird things.
Oh yeah. Well, if I can tell you, I'll definitely tell you. What I definitely could probably tell you is just general, like when I did my price discovery, what that came back and looked like, and in total, what the terms kind of look like, right, for the deal. Some of the stuff I'm sworn to secrecy. When we talk about some of that, but
I'll text you offline. It's okay.
Fair enough. All right, Perplexity, gentlemen. This is I would call this an AI app, right? So now we have this AI app out there that's built on top of other AI models, whether they're open source or closed source, right? And it now has an $18 billion valuation. So that is a big company, right? I think. So here's the question. What do you guys think about the business, right? And Perplexity? Do I have a revenue number here? Yeah. So it's saying $100 million in ARR, right? As of 2024. So, that's a pretty healthy multiple, I suppose, or kind of maybe in line with what I would expect. But this is an app. It's built on top of other AI models. It's got a subscription-based model as far as I can tell. Nick, what do you think? Lead us off here, man. What do you think of Perplexity? What do you think of this AI app space? Do you think we're going to see more companies coming out with these types of valuations in this AI app space?
Sure. We use it for sure here at our company. I think the results of what we're getting back from it are really good. And in some cases, we're able to work with it and get more information than you'd normally get through just a general prompt into OpenAI, ChatGPT, and things of that nature.
Okay.
It's been growing consistently, which I like. I don't like the ones that are just overnight; they just pop. And it's actually getting a decent amount of both buy and sell volume on our platform. So usually, when you're able to see that much liquidity, that's a benefit to the stock, both long and short term. So all in, yeah. If we were just talking about X and the long-term potential benefits, and now we're talking about Perplexity, I would lean into Perplexity, or XAI versus Perplexity, that sort of idea. Different altogether, but in the same vein, right?
Right.
So no, we would say this has potential, and to a certain extent, I think they could have a nice head start, and that would be their moat. There
Got
could
it.
be competitors, but the head start here is pretty beneficial.
Okay, Evan, what do you think? AI search, man. You like this company?
I have so a couple of hot takes here. So strap
All
in.
right.
All right.
All right.
One, I think their distribution plan has been very brilliant. I don't know if you guys, if you're a pro user, I know Nick, it sounds like you use it for your company, but they have bundled Perplexity Pro into a number of different subscription products where they're targeting, I guess I'm going to say, upper middle class users to basically jumpstart user growth. And the thing that Nick sort of talked about this, but I can definitely say is people who use Perplexity seem to love it. It has, I got to imagine it's got pretty high NPS. The product is very slick. It works really well. They do have their own model called Sonar, but what I think is really smart is that while they're building their own model, they're also utilizing and kind of building on top of all these other players that are spending a ton of money on CapEx. So like they kind of get all the benefits of all of these players and they're paying for it in tokens, probably to some like degree, but they're not having to nearly invest the way that, a Meta or a Google or an OpenAI does. And they get a lot of the same utility and benefit. So users really like it. They have a really nice distribution method. I mean, so I got it because I have a Uber One subscription. So they give it to you for free. It's like, oh, you're Uber One, you get a free Perplexity Pro subscription. I know in France, if you sign up for one of the telecoms, they Orange or SFR, like they give it to you. They're like, hey, by the way, like you're a user of our platform, you get Perplexity Pro. And they're just jump starting all of these people to get into the product who then really like it. And then we'll see what happens in a year if these people, churn or continue to use it. So I think that's really good. The second thing that sort of like is correlated, but it's a broader news story, is that there's an antitrust lawsuit between Google and Apple, which says that Apple can no longer pay Google for exclusivity for search. So Apple is going to need to figure out what they want to do about search. $18 billion is an expensive opportunity, but they pay over that every year for Google.
Right.
They could just buy Perplexity and make it the default search for Apple or for all iOS devices. And to me, I feel like there's a logic, like when you think of all these AI companies and they're growing substantially and the valuations are really high, you always wonder what the exit paths are going to be. And I feel like at this valuation, they're still acquirable. Yeah. And so my hot take is I believe that Perplexity will be acquired by Apple. That's my
right, write that down.
Write it down.
Nick, write that down. Okay. So the here's my thing, guys. I think here's my hot take. I think that the days of making really big returns for the large language model platforms will be done in like 6 months. So like get in now while you can. And then after this, I think the opportunity has kind of passed and you just need to wait for these companies to be public. Because I do think that they'll go public, right? Sooner than later. So then that really, as like a private market investor, like where's the opportunity? It's these app companies now. This is it. Like we're moving into this space where you got to pick winners. Like is Perplexity going to be a winner? Are they going to take market share from Google? Are they going to take market share from OpenAI or XAI or some of these other places, right? That's like in my opinion, that's a much more challenging investment decision, right? Than is XAI going to get to 300 billion? Because I think that's a hardcore yes. That's a slam dunk yes, right? And that's probably coming in the next 12 months. So,
Ooh,
Harvey's
hot
like
take there.
this. No, I mean, come on. Whether I think anyone believes it or not, believes it's justified or not, I think OpenAI and XAI are going to be $1 trillion companies. It's just a matter of time, right? So,
Okay.
they're going to get to that valuation before their revenue justifies it. I'll tell you that much, because of all the capex they're doing. They're going to ramp up the valuation fast, and then like we might have a $1 trillion. One of those two companies might be the first $1 trillion private company, right? Venture backed private company.
Sure.
Like I could see that happening.
And
So
just generally to support that, Aaron, you're seeing the private markets really doing great this year, up 20+% in terms of our top 50.
Yep.
While the public markets are really doing the inverse. So I love the fact that correlation broke down, because I've been waiting for that for a while instead of there being a lag. But yeah, I mean that's going to be some tailwinds here across the board, and a lot of that growth has come from the AI stocks.
Yeah.
So
I'm
absolutely.
very excited about this, because I actually think there's a unbelievable amount of money to make as an investor in these AI app businesses, right? Because like lately the trend has been, companies come out and they're like immediately at 5, 6, 7, 8, 9, 10 billion. Right. It's like they kind of like hit the scene. It's like AI, right? They hit the scene and then boom, they're at like 10, 15 billion, which is fine, right? But now you're talking about doing, 2, 3, 4, 5x. These are like very, very big companies, where I feel like some of these AI app businesses are going to come out. They'll like float around the $1 billion to $2 billion to $3 billion range, right? They'll get a lot of users. They'll have steady revenue coming in. Like their business models will have a chance to like kind of mature a little bit, and the product market fit will like pop. And then as an investor, you'll have like maybe like a 6 to 12 month window, if you're on top of things, where you can be like, okay, I can get in this company and I see there's like a potential for this to really break out, and I got this like window I can like take action, right? Like that to me is very interesting. I mean, Perplexity, it's at 18 billion now. Like a year and a half ago, 2 years ago, it was like 3. You know what I mean?
But remember, like we've talked about it here before, like we still haven't exactly figured out or cracked the code on what the consumer business model for AI services will be, and I'm still not a believer that every single person on the planet is going to spend $20 to $35 a month, like a phone bill, on AI. I believe that there's an advertising generated model or some other way to get in front of users. And one of the benefits of Perplexity is that they allow you to play with all of the models. So like you don't have decision paralysis. You're like, I can use Perplexity and still get Claude 3.7 Sonnet. I can still get Grok 3. I can still get ChatGPT 4.5, and I don't have to pay for each one of those subscriptions. I just pay for one. As I said, since they're like sort of bundling their service with other premium services, that subscriptions you pay for, it might be the sort of service that just grows because customers don't have to pay for it directly.
These are very good points.
And so I've always said that Grok's best opportunity too is that they can hijack the distribution for consumers to go direct to it, because you bundle it with your X subscription. And so I just think that there's a huge opportunity there, and there's 7-8 billion people in the world, and I don't think that everyone's going to be paying for it.
I love this discussion. Like this is the discussion I love as an investor, right? I love having this discussion. I love having the discussion about like, is Harvey going to start replacing lawyers at law firms, right? Is it too early? What about AI agents? They're coming. Is AI agents going to take care of all that? Like, to me, these are very interesting things to discuss as an investment thesis. And if you start to like get some of these things right, I think you stand to make a lot of money, right? If you can take action on it. And I guess what I'm excited about is because of that uncertainty, right, Evan? Mm-hmm. Like, I don't think the valuations are going to run so fast. You know what I'm saying? Because people are going to be like, well, like, I'm not so sure. Like maybe the agents come and they start to, to replace some of the stuff or whatever. Like, I don't, so you got a little bit of a window there. So I think with good research, sorry, I'm like an old school finance guy. With good research, right, and good understandings of the market and kind of where the opportunities lie, you can make a lot of money, and you got time to be able to, like, I guess a guy like me, selfishly, to like pull up some capital and go through that process and then go to market and have a thoughtful process of like entering a stock position. which I think is really compelling. So I don't know. I mean, I think the amount of money that people will make, investors will make in AI is going to be, it's going to be all AI apps. That I think the AI app like market cap in total in like 10, 15 years time will be multiples the size of the large language model businesses and even the infrastructure plays, right? It's going to be,
In total,
there's going to be a ton of money to be made
because
in that app
this will
space.
be there'll be so many more companies at the app layer. You know, there
For
have
sure.
to be. It's like how many competitors are there to iPhone versus how many apps does everyone have in their iPhone? And we did the count. It was staggering and
100%.
scary how many apps we have. But I think just whether it's Perplexity or it's Sirius or XM satellite radio before they had merged, or it's Google versus Yahoo, the playbook that the leadership is doing at Perplexity is really wise. They make it extremely accessible. Then the smarter you get, the more time you spend with it. It's almost like the more you love it because of all the flexibility you didn't realize it had the first 2-3 times you've used it. And then they do all those things like if you buy a Ford, you get a 6 months free of satellite radio. If you buy, what did you say, Orange Mobile, then you get 6 months free of Perplexity. It's very, very good so that you're the first kind of AI-enabled, well, it's not, you can compare it to what Google already has and things like that. But if you try something different for the first time, you try a new flavor, you're not going to then say, oh, okay, I'm going to try the next 5 that are coming out. Perplexity, competitor 1, competitor 2, competitor 3. So they're really doing a good job of getting out in front of people. And then the repeat usership, that's a pretty good testament that it's a decent product, right? So it's not like it's anything new in terms of the playbook, but the product is clearly one where there is a first mover advantage for how they're approaching the market.
Yeah, I'm excited for this and others that are coming down the pipe. But I do agree with you, Evan. I think it's still like too early to tell where this is going to shake out, right?
Can I ask you guys both a question?
Go ahead.
Do you believe that AI will have more of a disruptive impact, meaning on the broader economy, meaning it will like new companies will come and replace the old guard? Or do you believe that it's more likely that AI makes the old guard better? So it's disruption versus improvement.
Nick, go ahead.
Can we go both? I think what I'm trying
to think through is Aaron's like, these investors are going to make a lot of money investing in AI. And I'm trying to decide, well, would you make more money investing in the AI, which is like the kind of contrarian bet, versus just investing in the S&P and being like, hey, I believe the existing infrastructure with the AI is going to have more benefit from an investor perspective than investing in the new guard who's going to try to disrupt them.
Thank you. My dense skull needed that clarification.
Sorry.
I would hope that, it'll still have to be a combination answer. I would hope that any of the old guard that can embrace AI will be the big winners here. However, any of the old guard that ignore it, the threat will clearly be from any new player that could just come out and eat their lunch. But I mean, brand is very big. Brand is a very big sticking point. So if you look at where any of the Fortune 500 make their money, it's because they have clients, right? And those clients are either us at the retail level or other companies. And if we can make and continue to have those customers as sticky, maintain customer lifetime value, keep growing, they will remain in the winner seat. But if it's ignored, I think that leaves the window wide open for a competitor.
Yeah, I'd agree. I think that's well said. I mean, definitely there's going to be some creative destruction, right? I mean, within companies. So if they don't embrace this stuff, it's going to be killer. And some companies I don't think will be able to for union reasons.
That's a good point.
Whatever, right? So they'll just be taken out because they really just can't change as fast as they should. Others, I think, just culturally won't be able to do it. I actually personally do think that these agents are going to come on board and companies will have a real opportunity to eliminate a human job and replace that with an agent, right? So that will be a huge decision point for bigger companies, incumbents to make, right, Evan? And those that do it, I think will be big winners. And then of course on the product side, like if you have the Amazons and the Googles and the Microsofts and those guys continue to implement AI, I think that will be big. The one thing that I do think, and I'm starting to coalesce around this and feel pretty strongly about it, because no one's done it yet, and I don't know why. And we were trading texts about it. I like sent you guys a text on it this weekend. Like no one's connected the dots and just said like, give me all your data, give me access to all your stuff, right? And I think we were talking about it maybe last week, or we were talking about in the text. It's like it's too much risk. Like Apple can't just like flip the switch. I think Evan, you said maybe they're not there on the product side yet, right? So like to me, somebody's going to come around and be like, you know, give me access to your iMessage, fill this in. I'm going to download all your iMessage stuff in real time. Give me your Gmail. Give me your Salesforce. Give me your whatever, right? Google Drive. And I'm going to just somehow in a thoughtful way train or whatever, you know, even if someone came to me and said, pay me $5,000, pay me 10 grand, and I'll train on your personal data. And then you'll have your own like Aaron Dillon model, LLM an agent that will be able to do stuff for you. I mean, I would do that in a heartbeat, right? In a heartbeat. So like no one's done that yet. So I don't know if it's that idea, but there's probably a million other ideas. It's like, just, I don't know if the incumbents will have like the guts to take that plunge for liability reasons. You know what I mean? Because that, like, if you mess that up, that's really bad. You know what I mean? So like, and if you got deep pockets, that could be super scary, but I could see a startup being like, we're doing it. You know what I mean? Like full speed ahead. So yeah. And then I do think just like it happens now with Google and everybody else and Meta and everyone, right? There'll be just areas where startups can really dig in and focus, right? And just build a better solution. And the incumbents won't want to do that. Right. So I think it'd be interesting to see what that looks like. But
yeah, I agree.
This is all happening right now.
What do you think about the best example? Throw Evan's question into a weird direction here. The IRS. We're seeing all the headlines about dusting off the cobwebs and figuring out if some of those inefficiency can be remedied.
Dude, I got to tell you something.
Did we wait too long?
I've listened to, so along that line, I've listened to 2 podcasts with Howard Lutnick, right? There was one on All In. They interviewed Howard Lutnick, who's the Commerce Secretary. He's also the CEO of Cantor Fitzgerald, right around the corner over here. And then he was also interviewed by Pomp, right? Anthony Pomp, the Bitcoin fellow. So, I mean, he has this whole thing with the All In guys where they build tech, like a technology company can build technology for the US government and then just give it to them. Mm-hmm. And it's called, there's some Latin
gratis.
Terms, like gratis, yes. So so that's where I think, like, I guess Musk is building something for the Commerce Department around tariffs. I think there's talk about building stuff for the IRS. So there's no process to go through and decide who builds it. Like, I think just Musk and the fellas in the back just like let it rip and they like build a new, you know what I mean? Like an AI generated IRS processing system. Boom, done. You know what I mean? And
boom, done. Oh God,
that's it.
Better be the right type of boom, like a New York boom.
You know what I'm saying? But I think that's what's going on. Like, I think they're like automating, they're upgrading all the technology in the government and they're having software companies give it free. Lutnick talked about this whole thing, at least with the tariffs, was the example he gave, where it's like, he's like, I'm telling this company, it was some Fortune 500 technology company is what he said. They're building the tech for the US government for free. And then he goes, but what do you think is going to happen with all the other countries? They're all going to have to buy this tech because the US government doesn't. We buy stuff from everybody, right? So like every other country is going to have to license this. So build it for us for free and charge all the other countries a licensing fee to license the technology so they can pipe in properly. And like, you know, I think that's going to happen in a lot of different places. You know,
I think it works in theory. I think in execution, it's a bit different, but
always,
I thought it was interesting. I thought
how the sausage gets made, right? How the sausage gets made. It's never super clean.
Just to wrap up for what Nick's question, I think it's interesting because there's a world where we use AI and technology to improve the IRS's operational flow. And then there's another like legislative path where we just, I mean, the tax law is like 70,000 pages.
Right.
It's
right.
why don't you just take an axe to the 70,000 page book and make it much simpler? And then maybe you don't need to have crazy computers to figure out everyone's tax liability. So there's sort of like two meandering paths at the same time. So I don't know which one's going to go, but it seems very AI disruptive.
Yeah, I think AI could be taken to the tax code, and that would make sense. But actually, it's probably largely unnecessary, and it's almost like a database exercise for most of the IRS operations. You know, I don't think you need AI for this stuff. It's pretty cut and dry. So
listen,
the one saving grace is I think because so much of it is annual, and it can be corrected on a go forward basis, and it could be done in parallel. It is an achievable goal. Like I love to throw shade on the restructure of the IRS, but I think it is actually achievable.
Well, I will say this, guys. Speaking of taxes, there's buzz that they're going to bring back 100% bonus depreciation. So if you have a large capital gains event, and they do put this back in, you got to take a look at 100% bonus depreciation. It's the greatest gift that the U.S. government could give to someone with making a lot of money in 1 year. I've seen people pay no tax through bonus
QSBS and all that stuff, but
not even QSBS, man. It's like you can buy like a solar
plane.
Field. Or a plane, solar field, commercial gas station, convenience store with gas stations is another big one. It's like all these really interesting.
You got to bring this one up once we have Clint back on.
Oh, I can talk about. Listen, not to brag, but I told Clint about 100% accelerated bonus depreciation. He couldn't believe it, and he was like, we ended up like doing a whole bunch of stuff around it. So, yeah, man, it's like a pretty special thing. So to the point around taxes, like Evan, your point around the legislation bit, I think taxes are going to could be very different, right? With this reconciliation bill that's coming down the pipe here in April and May. So we'll see what happens. Right. But
yeah, free tips. Let's go.
We'll see what happens. But yeah, not tax advice, not investment advice. The whole thing.
Thank you. Right? Thank you for the disclosure. All right.
All right, fellas. This is awesome. Thanks, guys. I appreciate you, man. Good talk today.
Good week.
Good seeing y'all.
All right.